the Ministry of Finance of the Slovak Republic, the National Bank of Slovakia, and Visa. And a big thanks to Slovakia Travel, our conference partners, Embassy of Poland in Bratislava, CRIF, Slovak Credit Bureau, DECTA, Golden Gate, Blick, DevOps Group, Fumbi, Bratislava Stock Exchange, TPA Slovensko, Prosper and Pavlovich University of Economics in Bratislava. There you are. And Matej Bell University in Banska Bystrica. We also would like to thank our AI stream partner, TechMates, and our official networking partner, IDEA. But now I would like to start our panel discussion. Oh, no worries, I could move my papers over there. That could work too. So please, we have Lukáš Bonko, CEO of Bratislava Stock Exchange. We have Jana Péliová, Economic University in Bratislava that is rebranding. Anatoly Lolia, Regional Lead of ESCA Finance. Peter Takac, Director of the National Bank of Slovakia. Great to have you here. And Susanna Kaparova, Head of EIB, European Investment Bank, in Bratislava. We will actually begin with a short presentation by Jana Péliová on the topic of ESG. Then we will move on, and then we'll come back to ESG in a circle. That's our plan for today. Welcome.
Hi everyone, welcome to this panel. Just to make it a bit more interesting, I guess, and to challenge our moderator, I will start with a topic which is a bit less financial than the rest of the panel, but then at the very end we will come back to it. I am here to open a question which is potentially, I hope, potentially interesting to many of you and many of the panelists. And I would like to focus your attention to the question of private investments into very public topics. Bratislava University of Economics and Business, which is currently being rebranded, as Johan mentioned already, is a partner in a big European Horizon project, which is focusing on bankability by design for projects which are focusing on climate adaptation. And the tool or the way how we are planning to do so is to focus our attention to co-benefits which are very closely connected to the problematic of ESG. So let me introduce you this concept very briefly, and then maybe later I can answer potential questions. Why are we interested in this topic? For many years in the past, big environmental projects and climate-related projects were 100% financed by public sources. But as we can see now, the size, the amount, the volume of work to be done in this area is exceeding public sources which are available. So private involvement into this project, into this process is very much needed. And this is where we see the potential for improvement. And this is what we would like to move forward there and where we would like to work. Our idea, which I hope will help us to elevate this project, is to focus on potential co-benefits which are being created when thinking about new projects and searching for financial resources to finance these ideas. So what we want to do is to bring together ideas owners or project owners who've been or been not successful when trying to finance their projects, help them to find potential co-benefits. I will explain in a bit what we do understand under the co-benefits. Use the existing frameworks like ESG to make salient the approach and the direction that chip in this project can bring towards the climate adaptation. And later on, help through the exchange of successful projects, ideas, and frameworks to improve the future projects, and help also investors to somehow assess what is really worth to be financed and how to help those who have good ideas to find potential financial resources. So what we are planning to do is to create a bankability by framework, by design framework, which will be a platform where project owner can ask for help. We will use, what we want to use is techniques based on already mentioned AI support or AI assistant, and using the existing ESG assessment approaches to create or to help to improve the project ideas and business plans to have a better or higher probability of being financed. And that is why predictable bankability by design is the key end product we want to provide. And of course, our aim is to create a community around this idea. I was mentioning co-benefits earlier, and I know that many of you are very successful in your businesses and you are using these ideas every day, but unfortunately it's not used that often in that area when we are looking for solutions for environmental improvements. I will give a very brief example. Imagine that you are a farmer in Greece. There is very dry, there is no very low rainfall. You need irrigation system to water your fields. And at the same time, because of some infrastructure mismatch in that area, there is not enough electricity or sustainable electricity, sources of electricity. Imagine that you have sun, so solar energy is the obvious solution, and at the same time you need these irrigation plants. But the returns of these investments are actually very long, so there is not much interest from private sectors or other stakeholders like municipalities to invest into this project. But if you build those solar panels over those irrigation channels, you can create you can produce electricity. You can create a shade about the water surface, so the vaporization goes slower. So you save the water. Not that much water is needed. You produce the electricity. You change the climate. You create jobs because someone has to dig and build this system. So from ESG perspective, you may have a very high score, and this could be used, these co-benefits, merging these two, bringing together these two project ideas to produce solar energy and to increase the agricultural outcomes through irrigation could gain more attention from the private investors potentially and be financed. I know that this is really very basic and very straightforward idea, but this is just to demonstrate what we do have in mind when we are highlighting the potential of co-benefits. And what we really want to do is to create, let's call it Climb Invest report, which will be bankability report assessing technical, financial, and regulatory approach, necessary information, but also including the ESG part, which will highlight the potential environmental, social, and governance, improvements which are connected with this project. So just to start, before this financial discussion, I just wanted to show you that there is also AI intensive project which is not that much financially oriented in the first on the first look, but of course as it is focusing on increasing the interest from private investors, it also has very much to do with markets. I would like to ask you to join us in this endeavor. We would be very happy to know your feedback, your ideas on this topic. On this, using this QR code, you will enter a small questionnaire, 10 questions, 2-3 minutes to answer them, and we would be very thankful for your feedback. Thank you very much.
Thank you so much, Jana. That is a good introduction on ESG and what is happening in the European Union on the larger scale. We move straight on to our main questions that we're going to deal with today. Capital Markets Union. I'm a big proponent. We need a Capital Markets Union. Europe should be one market, not a fragmented market. We need capital markets. We can't rely on bank financing because bank financing is not good source of risk capital, and we need to grow new industries here. So basically what I'm claiming here is that the European Union need a few Manhattan projects. No, we're not going to build nuclear weapons, but we need fast, rapid development with less bureaucratic hurdles to get something done. Would anybody agree with me on that here? Or do we have the old-fashioned way, doing everything slowly but very surely, and then it usually ends up as usual, not perfect, as somebody was saying earlier today. So, Lukáš Bonko, you are the first speaker here, and you are the president of the Bratislava Stock Exchange, which is a capital market here in Bratislava. So we start with a joint venture of CEE stock exchanges, which is, I think, a great idea. Beyond increased liquidity, what are the tangible benefits and, more importantly, the biggest practical hurdles, be they regulatory or technical, to making this a reality?
Thank you for having me here. So first, I would like to start a bit about information about this project and when it started. It started very informally back in October 21, where we had a discussion with other stock exchanges back in Warsaw. What can we actually do to improve the capital markets and liquidity and our region overall? And we came up with the idea of interconnection of the markets, which means basically that we would stay present in each of the capital markets, but we will be interconnected. Therefore, anything which will be traded, for example, in Poland or in Slovakia, will be visible to each of the participants of the markets. And this would mean that instead of dual listing, where you are creating the dual liquidity pools or multiple liquidity pools, you will have one liquidity pool, and the depth of the market will be increased. because right now it's 8 markets, 8 stock exchanges, 8 CSDs, 5 CCPs, multiple governments, other stakeholders. It, of course, takes time to find a solution. But we are working very tangibly on the future of interconnection of the markets. We signed a memorandum between the commercial part, memorandum in November last year here in Bratislava with all of the participating stock exchanges. I'm quite happy that we were able to persuade also governments to join us, because this initiative can work also without the support of the governments, but we would like to achieve something what was achieved in the Baltic countries. And for that you need to have a harmonization of the regulation. And of course, we as a commercial institutions, we cannot provide the harmonization of the regulation. And also with the help of EBRD, which is helping us with steering this project and providing the knowledge, providing the independent member, because we are operating on the equal basis. There is no leading stock exchange, there is no leading country. It's equal partners. We are equal partners. And EBRD is helping us, of course. And we were able to persuade the 8 governments to sign a memorandum of understanding this year at the end of summer. And there will be basically push for harmonization among us. When we are speaking about going from north to south, Poland, Slovakia, Hungary, Slovenia, Croatia, Romania, Bulgaria, and as an observing country, because it's not yet a member country of the EU, North Macedonia. So what will be the outcome of the government part? Hopefully we will manage to be seen as this is the rough idea what can be achieved, what achieved the Nordic countries, is first to have a less bureaucratic burden. And the second thing, and actually I think one of the most important, but there are a lot of work to be done and a lot of question marks. Baltic countries achieved that they are treated as a single region by the MSCI, so the largest index providers. And if you are within the index, basically your liquidity, of course for the top companies, is way bigger. We are speaking about the trillions if you are in the developed. And for Slovakia, because of the size of economy and the requirements to be in developed market, it's literally impossible to be ever there, because you have requirements to have 2 companies which are over a couple of billions in market cap. You need to have GDP on a certain level. There are a lot of requirements, both qualitative and quantitative. So the only way to be in developed and to fulfill because qualitative we can fulfill, it's just about the regulation. But quantitative, it's about the size. So this can be the result of the government part. Very difficult one, challenging. It's not low-hanging fruit, but it will help. Our part is basically to create a fully interconnected markets. Going back to the second part of the question, what is more challenging, if the technology or the regulation? Technology, it's just interconnection. That's very simple. You need to work on it, but it's possible to develop it. Regulation is, of course, the most difficult part. And when somebody is speaking about the Capital Markets Union or now about the Savings and Investment Union, you need to think that it's not about the regulation of the capital market. Each country has their own commercial code, own insolvency rules, all the civil code. Own civil code. You've got so many differences, and you have to speak also about the tax code. So it's not possible to create a genuine single market, because there will be always differences, but we need to go somewhere to some ideal state of the harmonization and to actually somehow get rid of most of the obstacles. And speaking about, for example, having just the trade is not difficult. Trade is actually interconnection of the markets. Basically, that's simple. But where it's all the time the most difficult part is the post-trade, so the settlement. Everybody's speaking about the trade part, but forgetting about how you actually change the ownership and who will be responsible for changing the ownership. And this is the challenging part. And fragmentation is one thing. Of course, fragmentation is not helping to develop the markets, but you can solve the interconnection. But think about the Euronext. Euronext is the largest stock exchange group in the Europe. And Euronext is currently on it's France, it's Netherlands, it's Italy, and they are in other countries as well. And they do have the single ownership, single technology, but they are not able to create a single stock exchange, near a single CSD. Why? Because of the differences in the regulation. So the idea to have one stock exchange in the Europe, it's basically impossible. Although there will be a 28 regime, which can be very interesting. If you are not aware about the 28 regime, we are speaking about the virtual country with own regulation, which will be for hopefully not just the innovative companies, because who will decide what is innovative? There can be, now we have the greenwashing, maybe we will have the innovation washing. So I would rather see the openness for all of the type of the companies, not just some selected companies. But think about the idea is good. We will create a new regulation for the companies which can be used by them. But do you remember Societas Europea? So European joint stock company. It was 20 years back. There were a lot of talks about creating a European joint stock company with the common regulation, rotating HQ, and so on. But because of all of the political discussions and everybody wanted to have something in the regulation, it's a disaster. It's not working. There are not so many companies using it. There are a couple of them, but it didn't achieve what was the aim to be achieved. So the 28 regime can help if it will be done properly and quickly, and we need to work on a primary market. Stock exchange is just connecting the demand and offer. It's just connecting somebody who would like to sell and buy, but you are trading what is already listed, and to be listed, you need to have a company who will take the company public. So you need to have the investment banking. And now we have a work stream SIU to help develop the capital markets. But on the other hand, there is a CRD6 regulation, which is actually going to impose the quite harsh rules on the investment banking and the cost of capital if you are investing in the equity. So basically, it will be more expensive for banks to hold the equity on the books. So let's see what will be the outcome of this part of the regulation, because on one side we are going to help it, on the other side not so much. But still, what I really do like is the push from the EU to do something. The vision is good. I think what was prepared in the strategy for SIU, it's kind of opportunity to develop it, and hopefully it will be done quickly.
Thank you. Who would like to follow up on this great introduction? Yes, please, Peter.
Thank you very much. Lukáš, you opened so many topics, so I'd like to come back a little bit to the beginning and talk about this integration project from the perspective of the regulator. I think it's a very important project, and I'm very glad that Mr. Bonko initiated and is a part of it. Now, why? Because we are lacking the functions of the capital markets in Slovakia. We are very underdeveloped. That's something we have to admit. Because there is basically no equity in our stock exchange, and in the field that we are strong, it's the debt. We are currently having about 90 billions of the bonds listed in the Bratislava stock exchange, but again, there is no secondary market basically, because of the investors, not because of the stock exchange, but the investors get used to hold it to maturity. And there's a problem that the function of secondary markets is not working. The problem we have in Slovakia, and the reason why it is so underdeveloped, is because we basically do not have companies that demand the financing through capital markets. We do not have SMEs or small companies that would like to go to the market and demand the money from there, even though we think the infrastructure is there. And this is where the project comes of the integration, because we believe that when there will be the bigger family of the states, smaller states, providing bigger liquidity pool by connecting them together, it could help. It will probably not solve the problem, but it could help. And it is also part of the SIU, the Savings and Investment Union. It's broadly supported by the ESMA. And I would like to also add that it was elevated to the political level, as you mentioned, and now it is elevated to the regulatory level through the signing the MOUs we are now preparing within the regulatory bodies of the participating countries. So we are strongly supporting that, and we will see what will come next, at least in our region.
Thank you, Peter. Anybody else would like to follow up on this, or should we move on? Yes, we have Susanna from EIB.
Yeah, thank you, and very happy to be here with you. I am head of EIB, European Investment Bank Group office here in Slovakia. I represent both European Investment Bank and European Investment Fund. And we are the institution, the financial institution of the EU. We are the climate bank, and our shareholders are 27 EU member states. We are a non-profit bank with a simple but I would say powerful goal to follow up on the EU strategic priorities through the strategic and powerful and impactful investments. So it's our role, and we are linked, and as I said, we are helping to implement the EU policies and strategies. And Capital Markets Union, or SIA, Savings and Investment Union, is one of the EIB priorities. And maybe I would mention the Draghi report we kind of like discussed before. But in my opinion, and also in EIB's view, it's a very good reflection on EU. And there are measures to move forward with EU to somehow follow up on what is going globally, to speed up, to simplify, and to unify. And Draghi, in its report, which was issued 1 year ago, clearly says that there is enough capital in Europe, which we need to move forward, to speed up, to innovate, etc., etc. But we in Europe, we are sitting on this capital, and we need to put it in work. And EIB sees that through SIU or CMU, it's the right way forward. We need to unify through, or like within the last, let's say, 5 years, it was shown that Europe can step in and can move very, very quickly when the whole Europe is unified and we are using the common tools and common approach. So CMU is exactly this. Draghi said that we don't have the fully working single market. We don't have banking union. We are missing Capital Markets Union. So EIB is also here to help to frame the whole environment and to help with creating the whole ecosystem within the EU. And on the other hand, we are kind of like acting on this behalf because we are pan-European bank, really. We are located in every member state in EU. We are in all the regions. We were the first ones coming and presenting the green bonds on the capital market. We are now continuing with its digitalization. We, as I say, we are a supporter. We think this is the way forward. EIB plays a key role in the Draghi's report and in all these efforts, and we are ready. And we are, as I said already, like moving forward with this topic, but it's clear that we need to overcome the fragmentation. We really need to cooperate, to have single standardized regulation. We need to simplify the over-regulation, which is already here in Europe, and we need to be fast, much faster than we are up to now. So yeah, I just echo. It's for us. It's important. It's the way forward for Europe, and EIB is also here to help and support.
It's good to hear that from you, Susanna, from EIB. It's great to see that this problem is reflected in EU institutions and not only in the Draghi report. So that is very, very, very good news. Now, Antoli, I would like to hear your perspective from an industry participant.
From our side, from side of our company, we are a leasing company on Slovak market. Nowadays, we worked more than 3 years on that market. If we talk about ESG and whole information nowadays, what we discuss, from our side, nowadays we grow up maybe twice in financing green cars. Yeah, I talk about electric cars, some hybrid cars. Nowadays, small entrepreneurs and some companies want to work usually just with electric cars, something eco-friendly. It's a main point nowadays in 21st century. That's why we try to go with our clients together in that situation. Nowadays, we have main problem and issue with insurance, how to make insurance for that cars, because from 2025 we have information that nowadays usual car for taxi driver in Bratislava city for Tesla Model 3 or Tesla Model S, which they used nowadays, or Toyota Corolla hybrid. For example, price for whole coverage insurance nowadays more than 3,500 euros per year for Tesla Model 3, or more than 10,000 euros for Tesla Model S in taxi. You know, that's why nowadays we need to prepare some balance proposition for market, because we are working with clients in the fields, you know, and we meet up maybe every day with our clients who wants to make some business. Nowadays, a lot of guys from clients from other countries wants to make some business in Slovakia, because it's very interesting market for another countries, because you have on the market nice proposition with taxes. If we talk about another markets near with Slovakia. For example, nowadays we have some projects for next year. We want to collaborate with Bolt, Uber, and another flotilla in Slovakia, and we prepare some offer for them on the market for financing that cars. But main issue nowadays with ESG is insurance for cars from our side, But if you talk about our company, we try to manage our business process and prepare some eco-friendly rules, or some another ways how to reduce pollution. Nowadays, our employees use just electric cars or hybrid cars for business. If you talk about usual paperwork, nowadays we used U-Sign. We try to manage and finance new cars with nice eco-friendly cars on the market. But if you talk about Another way, we need to thinking about how to recycle that cars in future. Because if you talk about Tesla, if you talk about Toyota, we have some warranty for example, 8 years for battery. But nowadays, if we talk about cars more than 8 years old, we haven't any ways how to recycle that cars in Slovakia. It's very important for our future. That's why nowadays our investors of our company wants to invest in our company, but they want to invest just in green cars because it's maybe highest level of collaboration nowadays on the market. That's why we need to prepare some balance. We need to make some balance on the market because first of all, we talk about some green ways, but 50% of our clients thinking about how to reduce fuel because if you talk about fuel, more than 50% of cost of delivery something they spend on the fuel. That's why
exactly. That's why these environmentally friendly vehicles often have a lower TCO, total cost ownership, over its life cycle. But if insurance premiums of 10,000 euros or 2,500 euros kills that, I guess we would not see that many green vehicles on the roads in commercial traffic. So that is an aspect of this greening, of course, the E in ESG. I don't know if we should have incentives paid by the taxpayers here. As a taxpayer, I'm very skeptic, let's say it like that. On the other hand, we all like to breathe clean air, so we have to find some balance here. And I don't think that it's the policymakers and the politicians' job to dictate what the insurance companies should charge in premiums for vehicles. Absolutely not. And I guess these premiums are high because the cost of damages are high as well. They're following some actuarial tables regarding car accidents, I suppose. So I don't think there's much the regulator can do. Let's get back to what we're really talking about here. This is a Fintech conference, and we talk about capital markets, capital market unions, and integration as BSSE, Bratislava Stock Exchange, very well explained to us. So, in what way can Fintech drive this integration in Europe when it comes to investments, an investment union, saving in investment unions, that should be clear to say. Do we see the fintechs having a chance to be more easier to passport across the borders and make their products more available in the whole European Union than traditional financial institutions? That's the question. And of course, that question can go both to Peter and EIB.
Okay, I can start. Sure. I spoke about it. It's about integration. It's about cooperation beyond borders. You know, I think this is clear, and also for like Europe itself, but especially CEE region, and then especially Slovakia. It's really about a change of mindset, you know, and I think this is exactly how. Conferences, Finweeks, Fintech, etc., can help with this kind of like general discussion and debate, you know, really on a substantial topic. Why all this? Why it matters? What is behind? You know, to try it and to use. I think good examples. This is what we need. Really like good, clear cases. Because once there is a good basis, you know, then it's just going to run. So I see here a huge potential of, you know, fintech and all these discussions, because, you know, it's a common effort we can't do it alone, either individuals or even individual member states. So it's really like an effort of the whole society, and very much it's about the change of the mindset, because I spoke about the capital which is here in Europe, but we are sitting on it, and this is the biggest difference with the US. You know, there is much more risk approach which is missing here in Europe, and we need to learn it, because otherwise we will probably not be able to to speed up and to reach out the changing world these days. So this is why I say it's about really a mindset change for the whole Europe, for CEE region, for Slovakia especially.
We have a different pension system. Most of American investments comes from the IRA accounts, individual retirement accounts that are also placed in risky assets. I don't think there's any political interest in the CEE region to change the pension system to something like that. So that's a pipe dream in a way.
If I may, it's exactly this. There is a lot of capital in the pension funds in Europe. And yeah, we somehow need this money, these investments to start working. And it's true, the pension funds in US, the profit is in 2 digits, you know, not like 2-3% in Europe. And so in US, they would look at us like, are you kidding? Like, you know, you don't want to get more for your pension, etc. This is why I speak about really the change of the mindset. And yeah, a bit more risk-based approach, which we need here. And really, pension funds, this is key, how to unlock the capital which is there. This is why, for example, EIF is very much involved in these discussions and, you know, pushing to unlock the pension funds and investments there.
They did that around 15 years ago in Scandinavia, so there is a pilot project in Europe here, so it's not like it can't be done in Europe. Please, Peter.
Yeah, the pension is a great topic, and we can talk about it hours, I think. But maybe one small remark, someone in Slovakia should finally understand that we have capital markets, not in Slovakia, but in the world, that we can use to create our pensions for the future. But I believe that I'm going to retire at 70. That's the answer for it, because there's no other options. There are not so many young population that will be able to work for our pensions, so you have to find some different sort of solution that will be moving the age of retirement to the late ages. That's why I'm investing for myself, and I have 4 kids, you know. Okay, regarding the fintech question you had in the beginning, I believe that we are living in very interesting times. That's clearly to say. We have the AI, we have the tokenized assets, not the bitcoins, and the regulations have to adapt to these new trends. That's for sure. From the regulatory, the supervisory perspective, and from the discussions we have in the ESMA and with our partners across the Europe, I can say that we see the dark side of the innovation. I'm not a very big fan of having for example, the bitcoins or crypto assets allocated in my private investments in huge numbers. I do have it, but in a small. But maybe I'm rather more conservative in this way. But the discussions are about how to prevent the frauds, how to understand the new technology, how to adapt the supervisory measures to that, to make it more maybe safe for the ordinary people. And these are all the questions that we are discussing and trying to do. But still, going back to the tokenized assets, I think this is the future, because it will be very cheap in the end. You do not have to pay all the chain for registering the securities and so on. So yes, I think I have faith.
So you mean that we can get rid of the old school system of custodians holding your securities through tokenization to a large extent, not to a full extent, obviously?
I would say it's changing and it's going there somehow.
And we continue with the fintech. I will bring up the money banks, typical money banks that previously only dealt with transactions on small amounts like Revolut and N26. They're all moving into an investment sphere now because they realized as a money bank you can't make much money. Just having free liquidity and then not being a lending bank but providing this free liquidity to other banks and so on, you earn Euribor or something like that. So it's not a very lucrative business. And for this reason, they're moving into investments. Are these the ones that will be the future investment providers in the European Union as so-called fintech banks? If that is the case, I'm not so sure that's the way we want it to be. We're putting large amounts of capital and our pension capital and our savings into it, because these sort of platforms, in my opinion, are sort of inviting you to gamble. Yes, Peter, again.
Every investment industry, basically all investment industry is trying to gamble your money. But still, you have some safe havens. What we always say, from the perspective of the retail client, which we are mostly interested in, you have several options how to do that. When you want to have safe haven, go to the collective investments, to the UCITS fund, which is a great brand for it. And basically, you can't do anything wrong. Having a saving plan, putting monthly some sort of money into it, and you... Yeah, so... and of course, on the other side, there is, when you have some experience, you can start playing. And that's somehow maybe some people want to do, but most of them do not understand. And yeah.
And most lose money. And that is something that I don't know if the regulator's problem, but it is a problem when people lose their wealth and take excessive risk without understanding what they're doing. And it's a big difference investing in bonds, fixed income instrument, and real equity, or trading contracts for difference, leverage contracts for difference. Basically bucket shops that maybe are hedging the positions, maybe just bucketing the order and take the opposite position. I see issues with this as a person working in academics, and we've seen the bubbles before, we've seen the crashes before. But that said, the bubbles are probably even a bigger risk, in my opinion. Let's say crypto bubbles and such things. In the end of the day, Bitcoins is nothing different than Dutch tulip bulbs, in my opinion.
Thank you for mentioning the CFDs. I'm sorry for taking the mic to this last intervention. Yes, the CFDs are very dangerous for retail clients. There are serious studies among the Europe that says that retail clients are losing money. The 80 to 90% of the clients are losing their money with the product. So please, retail clients, do not touch any CFDs. We reacted to this by issuing the intervention decision that kept the leverage. So you cannot use the large loans for this. That was the first measure. And regarding the cryptos, I don't know how to say it in English, but we call it natopírovaný vzduch. It's like bubbled air. I don't know if it is even ESG compliant, because what is it? It's just you plug in the computer and do the math, and then you have Bitcoin, So different story is the tokenized assets when I come back, because that is the future, I think, because it relates to some underlying asset. It could be a bond, it could be a stock, it could be something that is well known and established on the market, but in digital form. And that's what we are now studying and trying to bring to the market.
Thank you. We're going to go back to where we started. We're back to ESG now. We have about 10, 15 minutes more, if we are allowed to use our full delay, that is. I have not been told to stop yet, so I assume that we're still good. So we get back to the ESG and debate. ESG, cost or catalyst? So, is ESG driving investments, driving financially sound investment, not just environmentally sound investments? I have two interesting case studies from my home country, Sweden, Northvolt and Stegra. I'm just going to mention those there, and the people not knowing them, your Google is as good as mine. And here I have large projects that could not find enough private risk capital, what I always was thinking from the beginning, for good reasons. And now it's costing taxpayers and local communities billions. So that is my little provocative hook I'm throwing out here on the ESG table.
Okay, so as we all know, there are so many possibilities how to use useful tools for both, for good and bad. So for every example of misusing these ideas, we can find equal number of examples which are highlighting the positive effects. So I would say that so many times mentioned greenwashing is, of course, a very bad situation, and mystification of some projects, declaring that they do have these positive effects, not just environmental, but also social and governmental, which they are not achieving, is very bad. But on the other hand, we teach at basic courses in economics that everyone has to chip in for public goods, and this is something we should push forward, and for this, the signaling, which is within this ESG, let's say, approach towards assessing processes, is a very good tool. Okay, so I do not want to reply to your question, so I will use my academic freedom.
That's perfectly okay.
To walk around.
That's perfectly okay.
But I just would like to say that also in this fintech has to play a big role, because it can help us to make it salient what is good and what is bad. On the other hand, it can also push overconfidence of each person very high, and then they are ending up losing lifelong wealth on stupid investments which were pushed through different platforms and applications. Okay, but on the other hand, Generation Alpha is very much environmentally or socially aware, and they are asking for this. So, and where there is the demand, the supply will find its way.
But General Alpha is quite small generation. I'm playing the devil's advocate on purpose here.
So if I may, from the perspective of the EU institution, EU bank, and I said at the beginning, I said we are the climate bank. So it's clear our priorities, goals, and the vision is going definitely this direction. We are supporting green transition. We are helping green projects to be bankable. We are using different kind of instruments, financial instruments like guarantees, venture debt, etc. We are using advisory to help prepare the project to be, impactful and bankable at the end, the green project. And again, I spoke about the change of the mindset, probably the change of the narratives. I think it's very similar with the green one. We really need to stop thinking about ESG or greening or green as something being a burden. We should switch it to the challenge, to the competitiveness advantage of these kind of projects. And this is also what EIB is doing. Just for your understanding, last year we invested almost 90 billion euros in projects, and more than 50%, closer more to the 60%, went to green projects. So this is how EIB is really pushing and driving this direction, because again, linked with the EU policies and priorities, EU decided to be 2050 CO2 neutral, climate neutral continent, and this is why all these actions and everything is connected. You mentioned two companies from Sweden, and everybody can find it. EIB is involved, at least in one of them. But again, I think don't look at it as a failure itself, lessons learned. Europe really has to take more risks, and we need to work with it. And we need to try, and we will find probably the ways out of it. I don't want to speak about these concrete examples because I don't have the inside information. But, take it as a challenge. It's probably, there is something happening with this to come back on the right direction. But also, like, it's an example for other projects that, okay, we make some turns, we change a bit, but, still the goal is there. So I think really we need to start also this, okay, then institutions like EIB are exactly here to help with the venture capital, with, venture debt, etc., being more risky. This is what we are being pushed to, and especially EIF is there for the more riskier investments to support and to allow for investments to SMEs, startups, etc. And then there are, and again, I mentioned Draghi report. From Draghi report, we are there, or EIB is there with the Tech EU initiative, for example, which is a huge, I think, the largest program on EU level to support scale-ups in EU. We have like 70 billion euros for next 3 years to mobilize 250 billion euros investments. So I think there are good things happening. We need to have visionaries. We need to have ambitious policy makers, I would say. Without this, it's not possible. And on one hand, we are speaking about over-regulated Europe. On the other hand, and you mentioned it, we need some kind of regulation, exactly, not to happen these things that, people are going to lose, savings, etc. So we really need to find the proper balance and unity within the EU. So they regulate, but still having kind of regulation. And the other important thing, and you mentioned, it's about education. We need to educate also in this, in investments and in this sphere, the general public.
Just one quick comment from me then, Peter. In this case, unfortunately, we need to educate the politicians, and that's a difficult part. Because they have their pet projects and they don't take any personal risks, so things can often go wrong. So that is the biggest difficulty. I don't know how to solve this problem, but I know that EIB is doing lots of good projects as well. And I did look at EIB's annual report last year, and the green investments do produce a positive yield. I have to admit that right away. So overall, there is a positive yield.
Depends in comparison to the other yields.
Still, still okay. Positive.
But the markets are up now. So, yes. But I want to say the ESG and the topics about it. It's a great idea. It's very important to talk about it and to preserve our planet, the best place for living. But what I criticize is the way how the European Union tackled this topic, because it's a great example of how the road to the hell was paved. In the beginning, when you remember the loads of the regulation that comes with it, the taxonomies and so on, reflected to the how the market participants are using the regulation. And we had a very good example in Slovakia from the supervisory practice. We found an issuer who issued the green bonds. When we look at it, wow, we have someone, let's have a look. And we discovered that it was a company that was recycling the tires, the car tires, and making from the material some bricks or some sort of construction material. And it was, it's a great idea, so it's a good reason for issuing the bonds, green bonds. But when we asked them, are you in line with this, and so on? Are you aware that what you have to publish, what kind of reports you have to do? Do you have independent evaluator? And there was the place where the debate stopped. So we gave them some time to get in line with all the regulation, and after 2 weeks they came to us and announced that we got rid of the label green bonds and we just issued the bonds. And this is the sad thing about this when it comes to the ESG ambition, because it's not working in real life. I can give you another example from the collective investment perspective. We do not have any funds that are under the Article 9, which are solely investing into the ESG assets. We only have Article 8 funds in the Slovakia. So, yeah, the question is, the idea is great, but the realization of it,
Thank you very much. That's really clear that the regulatory burden is high, and as you mentioned, there are no specialized Article 9 funds. What is a specific reason for that? Anybody knows? Or is it just too complicated?
It's just because of the obligations. We committed a supervision together with the ESMA, which is called Common Supervisory Action, which is the exercise amongst the whole Europe. And we picked specifically these funds, and we discussed with the asset managers why. It's the burden reduction. And you know, there is a policy, Rule 25, so the commissioner got the task to reduce the burden reduction 25% down and 35% to SMEs, if I'm correct. And then we have simplification and burden reduction as a new doctrine in Europe. And the ESG is the best place when it is going to be applied, because now they revise with the omnibus all the rules and trying to reduce the regulation.
So if we're looking at ESG, is the E or the G the most difficult part? Because the S seems to be working quite well in many senses, because it's not that costly and it's not that it's more difficult to make costly mistakes. Am I completely wrong here, or do I have a point? Anybody want to pick up on that question? Yes, please, Zuzana.
Again, it's clear I am the pro-green and pro-ESG, as my institution is doing. From our examples, or from our perspective, from our experiences, okay, it's a challenge, but challenge which is worth it. And I maybe explain. We see. Okay, you mentioned a few examples, but there are hundreds of positive examples which are in Europe going this direction. We see the changing mindset of the business companies who are really seeing now ESG or E especially as really an advantage for them, within this competitive environment, because there are huge investments needed, especially for heavy industry or energy difficult intense industry, etc. But this is why institutions like EIB are here. This is why EU is loading a lot of money through different schemes and instruments for the green transition. So investments are here. It's really about thinking that it's for something good. It's not just for reporting, for tackling the bugs, but that you are, or the companies or the state is doing it really for something. It's because of less energy, or better energy efficiency, less electricity needs, etc. All this is then, going to help the companies, and it's already helping. When you renovate, when you modernize the buildings, when you innovate, when you put new technologies within the supply chain or within the and the company, chain, you are saving money. You are helping your businesses, and you are saving money to enable them to invest, in more innovation, in more greening, etc. So I think it's working. It's again, and sorry to repeat myself, it's again about the change of the mindset. And we see, and sorry, I don't want to divide Europe, but we see Western Europe a bit more further than CEE, and again than Slovakia somewhere on the bottom. But there are good examples. It's working. So it's just that stop blaming and stop thinking that it's a burden. Take it as a challenge. It can work and it will help all.
So Sana, that's a very important point, and I think it's good that you bring it up. There are lots of good examples as well. I will give one anecdote. I visited BMW's engine factory in Steyr in Austria, and they're taking water from the river for processed water in the plant. And they were bragging how many hundreds of thousands of cubic meters of water they're saving every year with their new process. And I was like, doing the math and saw the meter, how many cubic meters passing per second. So that's like you're saving the amount of water that flows through the river in 7 minutes per year. Is that something to brag about? Oh, yes. Can you imagine how much money we save having to clean so much less water before we release it back in the river? So yes, saving the environment can save money. Now BMW's paid for this project themselves. But this is an excellent example when companies can get some support from institutions like EIB with green loans and green investments to actually make this planet a better place to live, and the company will save money in the end. So there are lots of good examples.
Definitely, and maybe one last point. Because we have this climate bank roadmap and all these policies also which are going like towards us as institution, we promised to double the financing for climate action, in the coming 4 or 5 years, because it's, the prevention is there also to save the money. With every euro we put into prevention, we save 5 to 7 euros on rehabilitation of the damage, So I think this is clear. The numbers are there. It's just really about let's follow the line, let's follow the crowds, and let's follow the good examples.
I will finish this with looking at ourselves. We should be pretty good about being Europeans. European industry is the most energy efficient industry in the world. So when European companies outsource manufacturing, let's say to other countries, let's say over in Asia, the energy consumption and amount of CO2 released per euro of value created increases often 5-fold. So we should be quite proud of what we have achieved in Europe when it comes to energy efficiency. And given our higher energy prices, it's a necessity. Thank you so much. I would like to thank the panel for this great discussion. And I did play the devil's advocate because I talked to the participants in advance and they said, go ahead, throw us the difficult questions. Well, I took them literally. Thank you so much for the panel. Thank you, thank you.